Thank you for joining us today for another episode of Issuer Insights, brought to you by ETF Market Canada, where we invite industry experts to share their insights on the world, investing, and ideas for your portfolio. I'm extremely pleased to be joined by Michael Greenberg, SVP and Head of America's Portfolio Management with Frankin Templeton Investments. Michael, thanks for being with us.
Thanks so much for having me.
Okay, so I thought we could start by just addressing the broader ETF market environment. As a multi-asset manager, you're keenly aware, of course, of capital markets dynamics, and we're happy to hear your perspective. So why is now a good time for investors to be thinking about systematic core equity?
Yeah, we've had obviously quite a market rally for a while now, but it's been fairly narrow. And obviously, passive ETFs do a great job of capturing that type of a market. We think that we're probably going to start to see more of a broadening out of that market. So having something that's more systematic, more core, more diversified is a great way to capture that. I'd say secondly, we are seeing obviously a lot of fee pressure. If you're an advisor or an investor, you're keenly aware of what you're paying for that investment management. So we really think that it's a good time to look at more of a systematic equity strategy that is a little bit more expensive than a passive vehicle, but gives you that extra opportunity for alpha generation, for diversification. We found in our own portfolios as a multi-asset PM myself, I build portfolios every day as well. We really found that having some diversification from those passive vehicles was key. We couldn't find anything in the market that really helped us do that. So we created our own funds to give us that exposure. And so far the experience has been really strong. So I think it's a great time to have a look at a more systematic equity strategy. Gives you that diversification, low cost, and probably not a bad time to start just looking at diversifying a little bit of the passive exposure that some might have in their portfolios.
Yeah, it makes a lot of sense. So what do people really need to understand about these funds?
Sure. So first of all, they're really core building blocks to give you exposure to some key equity markets. So Canadian equity, US equity, international equity. And what we're trying to do is to focus on 5 key factors that are out there in the market that we think if you can expose yourself to, it'll help you generate extra return, help you generate alpha, and really help just the overall performance of a portfolio. What we do is we screen the stock universe for these 5 factors to try to isolate exposure to these factors. We then build the portfolio using our risk management tools, really to ensure that we're giving ourselves exposure to the factors that we want, these factors that we'll talk about, I'm sure, while avoiding exposure to unintended bets. And that really is the key to giving that extra volatility, or that extra compensation, that extra alpha, while also having fairly predictable market returns in pretty much all market environments.
Great portfolio management tool. Yeah, okay, so I want to touch on the alternative and the conviction factors. So these are different than some of the more traditional factors maybe that advisors would be familiar with. Can you tell us more about those 2 specifically?
We're trying to isolate the quality, value, momentum, alternative, and conviction factor, as you mentioned. Those first 3 are probably fairly well known by the investing public. We've heard about quality, investing in quality companies, value companies, momentum companies. I think we capture them in a little bit different way. We manage that in a little bit different way, but those are ones that are fairly well known by the audience and by most investors. What is a little bit unique with with these funds is the other 2 factors that you mentioned. So the alternative factor, it's not a hedge fund. It's not that. What it is just other factors that exist in the market that don't neatly fit in that quality, value, momentum, or other traditional equity factors. So a good example there would be short interest. So a stock that has low short interest, that is not being shorted by the market or by market participants. So that's a factor that we want to isolate, and it just fits in that alternative bucket. I think with these types of systematic strategies, you need to continually research, continually find new factors to stay on top of things. And that's really where we're dedicating a lot of our research, is in those alternative factors. So I think that's a pretty big differentiator. I think the one that we're really excited about, though, is the conviction factor. Being part of Frankin Templeton, obviously a very large multinational money manager with tons of different investment teams within its walls. What we tried to do and what we're doing is actually harvesting the high conviction stock names of all of our active managers within Frankin Templeton and turning that into a factor that we can then screen stocks on. So we're basically trying to get that collective wisdom within Frankin Templeton as it pertains to stock picking, which we think we have some managers that do really well, and then turn that into a factor. So combining those 5 factors, I think is quite unique. And as you mentioned, those 2 factors, the alternative factor The conviction factor offered great diversification to those traditional factors, but also some great alpha opportunities and something that would be very tough for others to replicate themselves.
Absolutely. Super unique to what you're able to provide. Okay, so once you've filtered through the multi-factor screening process, how are you taking what's left essentially and building the portfolio?
Once we screen the universe for quality, value, momentum, conviction, alternative factors, we're left with a bunch of stocks that have scores. And then what we want to do is optimize the portfolio to give ourselves exposure to those 5 factors. At the same time, we're using some of our risk models to reduce exposures or even eliminate exposures to things we don't want. For example, there's no sector bets, there's no industry bets. In the international core portfolio, there's no country bets, there's no small cap bets, et cetera. We're really only leaving ourselves with exposure to the factors that we want while minimizing the factors that we don't necessarily want. And that's done through some of our quantitative processes. And what that does is it really gives you a portfolio where you're getting what you want, you're getting what you expect. It doesn't mean it always will outperform, but over a full cycle, you're giving yourself a very good opportunity to outperform. But also, you know where your returns are coming from, and you're not exposing yourself to things that you don't necessarily want within your portfolio. We found, for us, it's just provided a smoother ride and a nice tool to build portfolios around.
Yeah, absolutely. So while these are new maybe to advisors in market, you've been using these strategies to build your own portfolios for a while. Can you tell us a little bit about how your experience has been with these factors?
Yeah, sure. So as I mentioned, 6-7 years ago, we found that we were missing something.
Okay.
We had passive exposure in our portfolio. We had some very high active share, active managers, but we needed something in between just to even things out, to reduce some of the uncertainty that we were experiencing. So we created these core funds back then. We're now obviously making them available to the wider investing public. But what we found when we did some back testing of how these core funds have affected our portfolio performance, it was very, very positive. We saw improved performance, importantly, improved risk-adjusted performance. We've seen better downside in our portfolios. And key is we've seen less volatility and less uncertainty. The predictability of returns, the consistency of our returns were much improved. So it's been a great tool for us, and excited to make it more widely available, obviously.
So there, of course, have been similar strategies, similar core equity strategies in the market. What would you say differentiates your ETFs from the ones that are in the market?
The team behind these ETFs, the management team behind these ETFs, really has their history that began in the 80s. So through various acquisitions that Frankin Templeton made, through some talent acquisition, through some technological research and advancement that we've made, we've been able to sort of build this team throughout the years and evolve our own process. And that's really key. In systematic equity strategies, there's something called alpha decay. And what that means is, as you find something in the market that works and that can create excess return or create alpha, others catch on and it starts to decay a little bit. So you always need to be evolving these processes and these programs. They're not something that you can just set it and kind of forget it. So having a team like that we have behind the scenes, managing, researching, and working on these different factors that we're investing in is really key for the future potential performance of these portfolios. So the team is key. I'd say second is the factors that we've isolated. Having those 5 factors: quality, value, momentum, sentiment, alternative factor, conviction factor. These factors we think are great as a standalone factor individually, but when you put them together, you're really getting a great experience from kind of an excess return, predictability of return as well. And then lastly, fee, the cost. They're very, very competitively priced. Again, when you're thinking about your fee budget, where you want to spend your active management fees, in our view, it's a great way to allocate some fees to something that you're going to get something out of. You're going to get, hopefully some excess return, but a great portfolio building tool.
I love it. Well, thank you so much for sharing your insights with us today, Michael. It's been a pleasure to chat with you. Really appreciate you joining us.
Great. Well, thanks for having us, and look forward to the next time.
Absolutely. And to our audience, thank you very much for joining us today for another episode of Issuer Insights, brought to you by ETF Market Canada and sponsored by Frankin Templeton Investments. If you're interested in learning more, please be sure to visit frankintempleton.ca.